you guys told me to make a video on the Toni Iyke strategy, so I'm actually going to be doing it my own way. So whatever you see on the chart, it is my own understanding. At least it should be, if not 80% or like 70%. I'm not saying that I am the best or this is exactly how it is. If you want to understand better, if you want to know better, please, you pay for his mentorship. So I don't want to see any comments saying, no, this is not this, this is not that. This is the way I have seen him do it. If you want more clearer information, please, you know where to find him on Twitter. You pay for his mentorship, which is very important. And so I'm going to hop on the chart now. So first of all, you have to know the direction of the market, where the market is actually going. That is when you start to go to your daily time frame. So after going to your daily time frame, you start to come down to your 4 hour, your 1 hour. Just check the direction of the market to know where the market is actually going. That's the first thing. And again, and I've seen so many times where how the strategy actually works. It actually works mostly on the 45 minutes and the 30 minutes, mostly, just for clearer view. Then, but if you are not good at it, you can now come down to the 15 minutes. I've seen people coming down to the 15 minutes to execute trade, and they actually win with the same strategy. I've seen people coming down to the 5 minutes to also execute trade, and they also win. So now let me just cut to the chase and let me explain. So first of all, let's say for a buy scenario, the market has been coming down, creating a lower high, lower low, lower high, lower low, lower high, lower low. You understand? You know, the market is supposed to respect this lower high, because the market is in a downtrend. The market is supposed to respect this lower high. So what did the market do? The market broke this lower high, creating what? Creating a change of character. This is not a break of structure. This is a change of character. A change of character in the sense that the market is now facing the uptrend. So it now creates a change of character. You understand? Then if this market now break this other high here, I don't know if you can see it. If this market now breaks this other high here, automatically this has a break of structure. But the market actually first creates a change of character. So hold that one first. Now you have to mark the candle, like the lower high, the high of the candle that this market actually break, creating a change of character. Let me just zoom this. What is this thing doing? Let me zoom this so you guys can see it better. So you mark the candle that the market broke, that creates, mark the candle that the market broke, that creates a change of character. And mind you, if the candle that this market actually broke has a wick, like the wick is too much. Let me draw it for you first. Let's say, for example, this is the candle. It's not a full body candle. This is the candle. This is the candle, and this is the wick. This is the wick. You see, the wick is very, very long. You are actually going to mark the body of the candle alone. You understand? See, this is where the market came down and the market broke, creating a change of character at this particular place. Creating a change of character at this particular place. Now, this is the candle the market broke. So when you now want to mark the candle, you have to mark the body of the candle instead of the wick. Instead of marking it like this, as I'm marking this place, instead of marking it like this, you have to mark the body of the candle. You start from the body here of the candle. You mark the body of the candle. That is how you do it. In this scenario here, in this place here, you have to mark the body of the candle. But if the candle is a full body candle, you have to mark the top of the candle and the bottom of the candle. Easy peasy. Now, automatically, before the market break, there is actually a demand. There is actually a demand which actually led to the break, meaning there is an order block below. I'm coming. Templates, demand zone. So there is an order block below because the market cannot break like that. Something must actually prompt the market to break. So now, what his strategy actually says is that there are now two POIs. The first POI is this candle, the market break. The second POI is this order block. Now I will explain when to use this first POI and this second POI. Now notice, the first thing first, you have to know the direction of the market. You have to know the direction of the market. Then you come down to either of your time frames. But I will tell you to come down to the 45 or the 30 minutes time frame. But if you are not understanding it better, maybe you cannot find any pattern on these two time frames, then you come down to 15 minutes or the 5 minutes for fast, you understand, for fast entry. So let me put it here first. So then there must be a break of structure, there must be a double break of structure or a change of character for the strategy. There must be a double break of structure or a change of character. Don't forget that to make sure you're writing this down. So now, when to use this first POI? Let's do this. So if this market actually break above this lower high, creating a change of character, and the market keeps going up, you understand, is in an impulsive move, then it comes down, correction. Sorry, I just took my bait, I forgot to clean my ear. It comes down, correction, without actually tapping on this zone, this POI, then it went back up. Watch you. Then it went back up. Automatically, this particular zone is a liquidity because it's just a correction zone. It's impulse and correct, and market, you know how gold is now. When it comes to liquidity, gold usually take liquidity move. So automatically, this particular zone is a liquidity. Don't forget, the market did not take this zone. Market has not tapped this zone. This particular zone is a liquidity. So now we are now waiting for market to come down. Take this liquidity, tap on this zone and move, because this zone is still valid. When the market was correcting, it did not tap on this zone, this candle, it did not tap on it. This zone is still valid. So you put your, before then, just wait to, don't just pend order. You have to watch the market. Don't just start pending any order. Then this is how we now get those big RRs, which is buy position here. Hold on. Then is SL will be on the bottom of this candle. You see, very tight. Is SL will be on the bottom of this candle in mark, either on the wick of this candle in mark. Now, how many pips is this? This is just 2 pip. Is this 2 pip or 20 pip? This is just 20 pip. Then it's now going to target the highs where the market start coming down from, where the market start falling down from. Like when the sell start coming down before it not change character and start going up. That is where it's actually going to target, like the beginning of the sales. The beginning of the sales, that's where it's actually going to target. Now this is 10RR, sharp 10RR. Easier said than done. You actually have to work. You actually have to study the market. You actually have to study the market. Now, let me delete this. Delete this. Delete this. Delete this. Now, when are we actually going to use this other block, this second POI? That is when this POI has been invalidated. It has been what? It has been mitigated. So this is when we use this second POI as our entry. Now the market has come down. Like it was in the sell trend, then the market actually broke, not respecting this zone, creating a change of character. The market went up. No, don't call me now. Don't call me now. I'm busy. So guys, now when to use this other POI? That is when this particular POI has been mitigated. In what way? In what way? Let's say the market now changed character, trying to correct, like it's impulsive, now it's trying to correct, and it actually came down to tap this zone. You understand? Before going up. Automatically there's a liquidity here. It actually created the liquidity, trying to make a correction move. That is why I said it actually created liquidity, trying to make a correction. And you know that the market will actually take out liquidity, and the market actually take out liquidity. That is why I said don't spend order, don't just start pending order. Okay, I've seen this. Okay, don't pend order, just watch the market closely. So that is when you now use this place, this order block. You know, order block now, market will always respect it. That's when you now place your, you watch the market, don't start pending order, you watch it closely. That is when you now start placing, you start buying from that point. You now target the top, you start target the highs of when the market was coming on before. So this is it. This is 12RR. 12RR. Easy peasy. Market goes up. So now use this chart. Let me guys give you this chart. I'm going to draw it so you guys can screenshot it. You guys can screenshot it. So you guys will use this diagram. This is for a buy scenario, and if you want for a sell scenario, it's the same thing. Just convert it for a sell scenario. Very easy. So mind you, a disclaimer, this is how he does it. It might not be 100%. A disclaimer, it might not be 100%. That is why you guys actually have to pay for his mentorship. I have to be very honest. You guys have to pay for his mentorship to learn better. But this one, I'm just giving you an idea of how he explains it, of how now you guys now have to start doing the work to go back to your system. You sit down. See, once you are done watching this video, go back to your laptop, open your trading view, sit down, collect this pattern that is on your screen right now, and you look for it on the chart. You first look for the direction of the market, then you come down to your 45 minutes, your 30 minutes. If you cannot see this pattern, then you go to your 15 minutes and your 5 minutes. You understand? So I hope you guys like this video. I hope you guys share this video. I hope you guys save this video. I hope you guys push this video, because I am aiming to 1,000 subscribers. and only you guys are actually going to help me. There's nobody else. There is nobody else. Only you guys feel run am. So if you like more content like this, you know what to do. Share to your friends, share to upcoming beginners traders. Make sure you like, share, and I'm actually going to be dropping, and I'm actually going to be explaining directional bias to you guys. So, and guys, don't forget you guys to subscribe. Make sure you guys subscribe. See, I have only 143 subscribers, and I have a whole lot of videos, 143 videos for you guys. You guys will enjoy this channel. You guys will enjoy this channel. Just subscribe.